Welcome to your Mortgage Insider Update for July 22nd. Another summer month is nearing an end. Upcoming PCE report, so that's the prior month, June report, will come out here at the end of July. The Fed's favored measure of inflation comes out. They will be poring over these numbers as it is expected to be another benign, flat month of inflation. So what does that mean for us in the near future? It means we've been holding on tight and we've been holding on long, but the end is near. We are really hopeful to see Fed policy shift as we come into the fall months. Just a couple more hot months here of hot interest rates, but we'll take a look at the charts. We have made some improvement, and things are starting to tee up to be very good in the near future. We start off Monday with the 10-year Treasury flat right now at 4.23%. We are looking at 6 months of recovery, lowest level since March 27th, first week in April. That's when we started to get some of the inflation figures, and things were a little hotter than before. So we spent the last couple months with just up and down in interest rates, and just this last week finally settling in, currently level below resistance. We are hopeful to make it to the PCE report later this week and see if we can break to the next level lower. So we'll come back to you next week and show you the result. We come to the mortgage-backed security. Mortgage-backed security prices work the inverse in interest rates. So when we look at this chart, similar 6-month time period, we see the prices been higher. That's been good. Interest rates just last week, really getting back to March, beginning part of April, really best pricing we've had almost all year since February, when we had last seen this Fibonacci retracement level that we're butting up against this last weekend. We've since fallen back off. So we'll also be watching the PCE report to see if this can help elevate the price of the mortgage-backed security, making it a little bit more costly to the investor and a little bit nicer for our consumer with lower rates ahead. Look forward to bringing you the update again next week. Again, we'll get the PCE report on Friday, hopefully to move the markets. A lot of time between now and then, but we'll see how the inflation reports shake out. Really hopeful to see that improvement, and I think that'll make everybody in the real estate world just a little bit happier. More buyers to be able to unlock some of their equity and not have such a high interest rate. We could foresee by the end of the year the Fed's policy changing so significantly that we could see up to 1% lower interest rates, assuming that some of the inflation numbers continue to come down. And unfortunately, the economy does seem to be feeling the pressure. So the more pressure under the economy, more likely we see more layoffs, a little bit higher unemployment rate, and the Fed will act. So with that, make it a great week.